structure. So joining us now to break it all down is accounting professor at Montclair State University in New Jersey and author of the book, Positive Financial Karma, Daniel Geltrude. Welcome back to Wake Up America.
Morning, Rachel.
Good morning to you. Now, Professor, raising taxes never really a popular idea with American people in general, but how can we figure out at this point which politicians can we even believe in situations like this?
Well, here's what I say about believing politicians. When you have a politician that is promising to raise taxes, believe them. When they say they're only going to raise taxes on the rich and on corporations, that's when you don't believe them, because it never stays in that lane. You can't tax your way out of the amount of spending that we're having. And Congress is spending like drunken sailors right now, and I don't mean to offend any drunken sailors out there. It's crazy. You can't do it without raising taxes across the board, not just on the rich and not just on corporations. It's going to have to spread beyond that.
So let's talk about that. President Biden wanting to lift the top tax rate to 39.6. That's from 37%, which we saw that decrease over the past 4 years for individuals making more than $400,000. So, of course, this is the rich that you're talking about, but it's also going to raise the corporate taxes. So what are your thoughts on that?
Well, when you talk about why they're going to raise the taxes on high earners, by definition in this case, over $400,000, it's because they're not paying their fair share, supposedly. But the top 1% pays 40% or close to 40% of the total income tax that's collected by the federal government. So I'm a little lost as to why that's not the fair share. And on top of that, those are the successful people. Who are the ones creating jobs? Successful people. And when you tax them more, they hire less. And that also spills over to corporations. So you want to raise the corporate tax rate from 21% to 28%. Corporations are always driven to keep that bottom line up. When you're going to tax them, it takes the bottom line down. What do? They start letting people go. They look to replace them with artificial intelligence. And that's what we're seeing across the board. So to me, higher taxes becomes job-killing policies.
Right. And in addition to job killing, what about goods and services? Do those become more expensive when corporate taxes go up? Who pays for that?
Yeah, they absolutely do, because, again, if we go back to how corporations operate, they have that profit motive. So if you're going to tax them more, that means their costs are going up. If their costs are going up, what are they going to do? They're going to look to reduce costs somewhere else, and they're going to look to increase their prices for goods and services. What does that do? That creates inflation, and inflation is a tax on everyone. And those become the unintended consequences when you just want to stay with the mantra, tax the rich, tax those big bad corporations that create jobs for people.
And speaking of jobs, we're also hearing about pass-through entities, which are going to affect small businesses. Small businesses, of course, as we both know, Dan, have been greatly affected through this pandemic, struggling to even stay open or to reopen. How is that going to make it any easier for them to recover from this economic downturn?
It won't. It will actually be devastating. And when you look at small businesses, and by definition with the government, that's 500 employees or less, that makes up, small businesses make up, or they employ rather, 50% of the workers in the United States. So now you're going to tax them more when they're coming out of a pandemic and trying to survive as it is. It really could be a death nail in the coffin for small businesses. And again, they employ half the people in the country. What's the outcome of that? People lose their jobs. Is that what this is about? Hardly.
Which doesn't make any sense. So something I'm not hearing a lot about, but it was mentioned. Do you think this is going to affect state taxes? We're also seeing that mass exodus, of course, from places like California to New York to different lower state tax states like Texas, let's say. Is this going to raise that as well?
It will, because when you start to combine your federal tax and your state tax, for many states, particularly in the Northeast, let's say New York, for example, and they're talking about raising taxes even more, you get well north of 50% income tax. Think about that. You're paying more than half of what you earn to either the state or the federal government. How is that? That is beyond fair share. So what's going to happen is people are going to migrate to the lower or no tax states where they could at least get some savings. And we see that happening as it is. We see states like Texas and Florida just having so many people move down there, and their economies are growing.
Right.
So it just goes to show you that lower taxes create an economic boom.
You know, Professor, there's so much more I'd like to talk to you about with tax season coming up. Are people filing early to get it in before this all goes into effect? But we'll have to do that another time. Unfortunately, we're out of time. And I don't know if your tie's for St. Patrick's Day or for money, but you got the green going, and I'm a fan. So thanks for joining us.
Thank you, Rachel.